Hi, Kenneth. It's great to be here with you. It's a very exciting time to be talking to you and what's going on with your company. And we were discussing earlier, but a lot of people here today will be in an earlier stage of their careers trying to get things launched. I wonder if you could tell us about how you got to where you are today.
Sure. So Credit Karma is a 9-year-old company now. So we started in 2007. From background, I spent a number of years in the credit card space, um, and discovered my first tech startup right after credit cards, and really loved the space. Really loved the culture, loved the way that people operated, and subsequently went to two or three tech companies and stumbled upon the Credit Karma idea, right? And the background of Credit Karma was in 2007, the only way a consumer could get a free credit score was if they would respond to a kitschy commercial, put in a credit card, and if they didn't cancel their subscription within 7 days, they would ultimately be charged $20 to $30 a month until they canceled. So we thought there's got to be a better way to educate consumers about credit. There's got to be a better way to provide the access and the information. So, I think we fundamentally have changed the industry in those 9 years. You don't really see those kitschy commercials anymore, although some people would say ours are a little kitschy as well. But the reality is ours are completely free. So we've created, I think, a whole generation of consumers who understand their credit. And more importantly, we think we've created a generation of consumers who will take advantage and be better consumers and more savvy consumers because of the access and because of the education that we've provided.
Right. And financial technology, or fintech, as we must say, seems to be an incredibly hot area. I see 18 some change billion invested in it last year, twice what was invested in 2014. Like, why do you think, why is this moment for fintech so hot?
Yeah, well, if you think about fintech as a whole category, I mean, they've largely been dominated by incumbents that are huge companies that don't have a lot of incentive to motivate or innovate. So, you think about these 100+ billion-dollar companies, the biggest banks in the United States, the biggest banks in the world, they are entrenched with advantages such as regulation. It's very expensive to play in a regulatory space as a startup. You need a lot of capital, you need a lot of expertise. So they basically have these moats against a lot of disruption. I think, if anything, over the course of the last 10 years, you've actually seen a lot of these moats come down. So whether it's Square, Braintree, there are a lot of companies that actually can show, wow, technology can really move the ball forward, and certainly there's a higher cost from a regulatory perspective, but the margins are so rich and the companies are so bad, the big companies are so bad about innovating, you're seeing that trend now.
So have you experienced a lot of pushback? As to use the horrible D word, as you've kind of disrupted this space, have you seen a lot of pushback from the credit agencies and others?
Yeah, I mean, it's an interesting story. So when we started Credit Karma in 2007, literally no credit bureau wanted to work with us. All three of them said, thank you, we're not taking on new customers. We're like, wait a minute, we have money, we have a check, we're more than happy to pay you. We're not looking for a free ride. And literally they all said, thank you, but no thank you, go talk to the other two bureaus. So, there certainly was a lot of pushback. And, I think that's true across all of it. I think consumers are also pretty cautious about our business and cynical. They thought, well, we've seen enough of these commercials. I've put my credit card in enough times to know that there's no real free credit product in the space. And then lastly, from a banking perspective, they're like, well, it's kind of interesting, but do you have enough users? Can you get to enough scale? Are your users only applying for a credit product because you told them to apply for a credit product, or are they actually going to be good customers for the bank? So, I mean, I think there was cynicism and pushback from all three of our primary constituents when we started. And over the years, I think we've assuaged most of those concerns. Right now, we write some of the biggest checks to the credit bureaus. We have an NPS, almost in the 80s when it comes to the consumers, and we're driving a bulk of the traffic and the volume for many of the large lending institutions. So I think we have disrupted and at least changed the philosophy and the context of Credit Karma in their eyes.
So relations are better with the credit agencies now than they were at the start, then it's fair to say.
They are. I think that we've certainly disrupted one model, right? So the predominant model before Credit Karma in this space and directly relating to consumers was very much provide a quote-unquote free score, grab the consumer's credit card and then enroll them into credit monitoring for $20 a month and hope nobody pays attention to the fact that they're being charged $20 a month. And that was a multi-billion-dollar plus industry. We've changed it to Credit Karma buys hundreds of millions of dollars worth of credit data each year, gives it away free for consumers, and hopefully we're smart about helping consumers find the right loan products, helping them optimize their portfolio of credit. And if we do that, then we make money, and it goes from what was maybe a very opaque and sometimes unscrupulous industry to one that's very transparent, where we're very clear about what we do. We are giving away information, we're giving scores, there's no obligation to do anything on our platform, and we don't sell any consumers' information. We're not a data provider. I mean, that was one of the things I think that consumers were peeved about. People thought about credit as, well, it's my credit report, it's my credit score. Why are you charging me $20 a month to access it? By the way, I know you're selling it to the banks on a weekly, daily basis as well. So I think those are some of the ires of the consumers, and I think we're fortunate enough to be able to recognize it, not avoid this, or to avoid the same pitfalls that a lot of the other companies have done.
Right. And were regulators, were they an issue as well?
That's a great question. When we started, regulation is one of those things where it's a bunch of gray area, and it's still a bunch of gray area now. I mean, if you take a look at a lot of the laws, I mean, they were written 20, 30 years ago. So for us, FCRA, which is the Fair Credit Reporting Act, it was a law that was written in the 70s or 80s, so very much predated the internet. And the question is, well, as we developed our model, how do we think about that law? Where are we? And are we in violation of it? How will banks think about it? And more importantly, how will regulators think about it? So we decided to take advantage, and my philosophy these days is there's actually a ton of opportunity in the gray areas of law, right? And gray area not necessarily being bad. Gray being unclear because the laws that were written predate a majority of everything that exists on the internet today. So I took a pretty strong stance at Credit Karma. I said, well, as long as it clearly says we can't do it, we will do it. What we also have to do when we actually look at laws and regulation is we have to err on the side of consumers, because almost in every instance, the laws are written in such a way that they're there for consumer protection. So I said, well, if we get called out on something or we get into hot water over something that we did, I want us to unequivocally be able to say, well, the consumer benefited because of what we did. Be very clear about that. And I said, if that is the ultimate downfall of Credit Karma,
Right.
so be it. I mean, you have to take a lot of risks in the startup world. I mean, there were probably at least 4 or 5 times when we nearly went out of business. So you have to take shots, you have to take chances, and I think regulatory is a great opportunity if you know the types of chances and shots you want to take.
Right. I mean, talking about risks, I mean, obviously it's paid off for you so far as I see you are officially a unicorn 3 times over. And how sustainable do you think the industry is at the moment? There seems to be so much money going into it. I mean, are we at the peak? Where are we in the cycle, do you think? And how do you think it's going to shake out? I mean, there'll be a lot of people here today who are obviously going to be thinking about fintech investments or have started their own companies. Are they too late to the party, or is it, can a good idea still come through?
Yeah, I mean, I think let's first talk about the opportunities in fintech. I think the party there is just beginning. I mean, there are just so many banks, so many antiquated approaches in terms of loan facilitation, loan originations, even credit underwriting. I mean, if you look at anything in the financial services world, there is so much opportunity there. So I would say if you're looking in that space, I highly encourage you to continue. I think there will be an enormous amount of disruption over the course of the next 10, 15 years. I mean, if you look at what Uber has done or Airbnb has done, and you think about how old world technologies have improved sort of drastically, and you think about banking, it's still kind of the same, right? I mean, you still have the ATM, maybe mobile banking. Those have been the greatest innovations in, at least from a consumer perspective, over the course of the last 20 years. I would argue they're nothing compared to what we've seen in other spaces. So I think that that's very clear that fintech has a lot of room to grow. When it comes to the space itself in terms of fundraising, I mean, There is still a lot of investment capital out there. I mean, I think there are probably hundreds of billions of dollars on balance sheets uh, of various pension funds, as well as high worth individuals and company balance sheets that will ultimately fund great companies. What you'll probably see is less and less investment in the unicorns, if you will, right? Because if you can't get out into the public markets, which has been pretty difficult this quarter, then you're going to be challenged. And you saw a bunch of traditionally public markets investors come into the private market sector just because they saw the opportunity, but also because a lot of these companies were staying later, and they were like, well, the funds that we used to build on and the funds that we used to go into IPOs, there aren't any of these tech IPOs, so they wanted to get in early. So I think there's been a little bit of a shift there. I think great companies, great late stage companies will still not have a problem getting funded, even in billion-dollar valuations. But this is not a new, not a new call. I mean, I think a lot of people have said there will be a lot of unicorns that don't get the funding or see major down runs over the course of the next couple of years, and that probably needs to happen.
Right. I mean, I noticed Google is one of your investors, and obviously Apple as well, very interested in the financial space. I mean, do you think the entrance of these massive tech companies is going to speed this process as we move away from the traditional banks to more kind of tech-based financial solutions?
It'll help, but it's interesting when you look at things like Apple Pay, when you look at what is maybe even the largest of the tech companies from finance, whether that's a PayPal. I mean, it still hasn't moved the market that much forward. I mean, PayPal is a 15, 20-year-old company. They've done great things, but it's taken 15, 20 years, and they've come nowhere near the Chases, the Bank of Americas. So I think there's certainly a desire, and even with capital, even with a lot of great technologists in the space, it's still going to take another 15, 20 years to really make that business scale.
And is that because one of the obvious things with finance is that security is so important? People are very worried about leaks, etc. Is that what's holding it back? Do you think? Why is the pace of change so slow?
Yeah, well, security is tremendously important. I mean, that's one of the things that I continue to say every night. Like, that's what keeps me up at night, is how great is the security. But I actually don't think that that's the what's holding the industry back. It's the fact that nobody in the space really wants to move that quickly, right? For every financial services product that you develop, there are a number of stakeholders that will sort of want to see it stalled out, right? There are a number of people who are making great margins on everything that they do. There are a lot of attorneys whose job is not to take risk. So when you put those two things together, it's actually quite challenging to get a lot of innovation, because at all points in time in fintech, you either need dollars, right, in the form of investment, you need pipes or rails, into some of these large lending institutions, and there are stakeholders that don't necessarily want to see it move quickly. Now, they're not necessarily against innovation, but they don't have as much of an incentive to move quickly as you do, because the margins are great. They're not seeing their business erode like a lot of other industries. I mean, we were talking a little bit backstage, like media.
Yeah.
You have to innovate quickly if you want to stay in the game. In finance, that's not true, right? No one feels like, wow, if I don't really change banking in the next 5 years, we're done, right? No major bank executive ever says that, and I think that's the difference you see.
Yeah, and also there's a history of financial innovation not paying off for people, isn't there? So, we've seen from Enron to the mortgage market, we've seen innovations backfire on people.
That's right.
So I've seen you say that lots of people look at you disrupting the credit score market, but actually you're much more than that. So where do you go next? What do you want to do with the company? What have you got, like 50 million people signed up now?
Yeah, we actually have a little bit more than 50 million unique American users on our platform. So I think of this, when I talked a little bit about Uber earlier and major disruption, and really how do you rethink the market, the financial services market. So today we focus a lot on the lending side. So for us, we think for the first chapter of our business is really changing the way consumers thought about credit scores, credit report, changing the model, giving access. So 8 years, 9 years in, we have over 50 million Americans on our platform. So I think we've done well there. But we actually have higher and better motivations, right? We think, our goal is always to think about solving consumer problems. And we look at 3 primary problems in the space. The first one is this idea that, with great technology, we should have better consumer experiences. And what we see is that about 70 to 80% of all credit applications are actually declined because the wrong person applied with the wrong bank, right? And that's crazy in the world of internet and the world of technology that we have. So we're looking to solve that problem. The second piece is transparency. Well, if there are 5,200 financial services industry companies in the United States that lend against thousands of loan products, it is literally impossible for you to understand who would loan to you and at what interest rate. And then the last piece is, we think that lending is still way too complex. People don't understand it. So we're trying to create a platform that will address all three of these. We think about a model where, as a Credit Karma user, we will be able to notify you when your credit score goes up 50 points, when interest rates on the macro level go up 50 basis points. We will be able to push out a notification that says you've got 6 lenders who will now lend to you because your credit score is improved. And if you're interested in this loan, give us your thumbprint on your phone as as the permission and the consent to facilitate this loan. You won't have to worry about whether or not you'll be approved anymore, because we actually sort of know that you'll be approved ahead of time. You won't have to think about filling out 50 questions on your mobile device, because we all are moving towards our mobile device. And it will be against tens of thousands of loan products, so you don't have to worry about, are you getting the very best deal. That's really where we think a big step forward could be in the lending space. We're not here to innovate against a mortgage and can we underwrite better. We think the banks are great underwriters. They're not perfect, but from a statistics perspective, they do fine. We think about the consumer problems of, well, if you are a subprime borrower or a low-income consumer, where is the technology platform? Who's thinking about you? Who's building the product that can help you save $25, $50 a month? That's what we want to build in Credit Karma.
Right, so you think this time next year, what will you be doing? Will it be a very different company, lots of new products?
We've got probably another 5 or 10 years in our journey, just in chapter 2. I mean, banks are notoriously slow to innovate, so we have a lot of APIs, a lot of relationships to build still.
Great. Well, thank you so much.
My pleasure. Thank you.
Thanks a lot.